Hi, everyone. Today, let's talk about Apple. Then we'll talk briefly about the federal budget. And then we got some charts to go over. And then we'll finish up with my returns for today. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Apple said late last night that COVID restrictions in China are hurting iPhone production, and the stock reacted a little bit to this. It was down early in the pre-market, but then did finish up just slightly on the day at 20 cents or 0.14%. They say their facility operated by Foxconn is significantly reduced in its capacity, bringing up worries that Apple could sell less iPhones going into the future, and it signaled slowing growth for December. This is especially relevant because they said they're seeing high demand for their current phones, even though those phones are at higher prices for the regular and Pro models. Current policies in place currently takes about 31 days for Apple to receive a new iPhone, longer than the average 2-day lead time previously. I really thought this would weigh on Apple more and weigh on the overall markets a little bit more, so I was a little cautious going into Monday, but the stock held up okay, and so did the rest of the markets. Moving over to the U.S. federal budget, they said they cut the deficit in half, which isn't really saying much when the deficit was $2.7 trillion. And they were spending that during COVID, and now they spent $1.375 trillion, more than total federal revenue. So they still spent a lot of money, just slightly less than previously. It's kind of like somebody who's in a ton of credit card debt say, at least I've slowed down my spending, even though we have all of this debt on hand. They also mentioned that the deficit reduction would have been greater if it wasn't for the student loan forgiveness program, which made the education budget around $408 billion larger than previously expected. They say the federal budget was $4.89 trillion, and they spent $6.27 trillion. And the reason that this is important to us as traders and people who trade the markets, this affects inflation. When the federal government continues to borrow money from the Fed and spend that money and put it out into the economy, that creates inflation. It's not often thought about that way, but in reality, that's what this is. Anytime the federal government borrows money and puts that into the economy, that's new money that didn't exist before, and that's how you get inflation. It's not just the Federal Reserve buying a bunch of bonds and the federal government sending stimulus checks to individuals. When the federal government spends money on programs, and that money did not exist before, that is inflation. So this is a good indicator to see the federal government spending a little bit less, even if they're still spending on the deficit. Moving over to the charts, we got the S&P 500. We had a gap up on Monday, dipped down into the midday, and then rallied up here towards the end of day. I'm honestly a little surprised. I thought we would get a little bit of a down move after the choppiness we saw on Friday. We got right up to that 144 EMA here on the hourly chart. If we get a breakout from here, that would be some pretty bullish price action. I would be surprised to see that, but this definitely looks bullish here in the short term, at least into Tuesday. And then remember, we have CPI on Thursday, so I would expect Wednesday to be neutral to bearish. So maybe a rally into Tuesday, sideways price action Wednesday, and then bearish price action on Thursday, especially if that CPI comes back a little hotter than expected. In terms of supply, I would be looking for the SPY to get up to around 385, 386, back in this previous demand range, before selling off into Wednesday. Moving over to the NASDAQ or the QQQ, similar story here, pretty bullish on the day, got above that 55 EMA, and then we got the 144 sitting all the way up here at 273.30, and I would expect that to be the point where this rally fails, which gives us a little bit more upside potential. There's going to be some demand in here at 270, of course, that big round number. But there's certainly potential that we get a little bit above that. The MACD looks very bullish and we're not overbought yet here on the RSI. So this does look like a pretty decent rally, a little bit of room. But remember, when CPI comes, that's going to trump everything. Moving over to the Russell or IWM, this still looks very bullish. The structure is forming here after that big move down we had with everybody else. Definitely seems like we're making some decently higher highs over here. We didn't get above that gap up, but as we rally here, it looks like we're going to get all of the moving averages back in step, the same way we saw over here on October 21st. So if we see another rally like this, there could be some pretty good potential here. And there's decent upside potential up to 182. And then we got those most recent highs here at 185.50. So if we see a move into any of those ranges, there's upside here on the Russell. I do want to go over the ratios today. So we got the NASDAQ versus the S&Ps. You can see we had a big sell-off. It looks like we might be forming a moderate bottom here. If you go back in time on the daily chart, this is back to the same ratio we got in March of 2020. And we're also very oversold here on the RSI, and momentum is starting to cool off here on the MACD. So definitely worth paying attention to. If we do see a little bit of a bump up here in the NASDAQ, maybe we see some short-term outperformance the way that we saw here in May, where we had that rally against the trend for the NASDAQ. We have a similar story here on the NASDAQ versus the Dow. Big overperformance all the way since October of 2019, where the NASDAQ rallied up super aggressively. We've since fallen off back to that similar range going back to March of 2020. And we have these longer term areas of support right here. And it seems like we might have found at least a short-term bottom in the NASDAQ versus the Dow. And then SPY versus the Russell. This still looks a little bit bearish. We did break below the previous range. So I'd probably pick the Russell over the SPY here. It seems like the Russell is going to continue to outperform here. But right now it is still pretty sideways and mildly bearish. For top gainers, we do have one for the day. We got CHWY. We had a big move down here last week in CHWY, getting all the way down to $32. And then we bounced up from this previous level of demand, which has been generated here from May and then once again in October. And then we bounced off that level once again, getting back into this range. If we see a decent rally up here, you should expect the stock to get to maybe $45, which would be awesome, or at least previously to these highs at $39.50 to $40. So CHWY showing some signs of life again after that big rally, after that big move down. Moving over to DXY, I thought we would see a little bit more bullish price action here in the dollar, but really it just sold off starting on Sunday and then continued down into this previous level of support going back to October 4th here. If we do see a breakdown of this level, I would expect it to go down to at least 109.60, if not a little bit lower to this support zone around 109. If we do see that breakdown, that should be very bullish for stocks across the market. But of course, the dollar could rally on bad CPI news. Moving over to JNK, we had that rally up to resistance, and we kind of went sideways right through that resistance. So if we stretch this out here, got the retest right onto that level, and then we have a little bit of a bullish pop here right at the end of the day. This rallies up to around 89.88. That would be very bullish for stocks and very bullish for growth, as well as the NASDAQ. So keep an eye on this one. I thought this was kind of generating this downward price action. We got this weird formation here, and it looks mildly bullish here into Tuesday. Moving over to TLT, you can see big red bar on the daily chart, continuing this relentless down move. It's interesting to see we have government bonds continuing to the downside, even though JNK is finding some support. Not sure exactly why that is. I guess you could argue that JNK offers those higher percent returns compared to these 20-year treasuries, but again, 20-year treasuries are still very low risk in comparison to those junk bonds. They have sold off dramatically, at least over the midterm here, and it looks like they're going to continue lower to some previous lows. If we zoom out here to the weekly chart, it seems like we could get down into this $90 range. Those would be similar prices that we saw here in February of 2010, January of 2011, and June of 2009. So some pretty low levels that we've seen on TLT for a very, very long time. And once again, I know I've said it a lot of times, but I think TLT is getting pretty oversold here. We've been hovering well below the 30 RSI here on the weekly chart for a long time. And I've been buying this stock in my buy and hold accounts. And then lastly here for the day, we have the VIX. MACD still cooling off, but the VIX is still moving downwards. Getting pretty close to oversold here. Definitely worth keeping an eye on. Last time we were oversold on the VIX, or at least close to oversold, it was in March of 22, where we basically bottomed and rallied up on the VIX. So a big move down in the stock market. So keep that in mind as you continue to trade. Seems like we're going to get right into that oversold as we get the CPI report. And then I wouldn't be surprised if we got a big move up in the VIX once we get that CPI report. Moving over to my accounts for the day, not bad, up $185. IWM was up 81 cents. And the NASDAQ was up almost $3. So probably should have made a little bit more money today. But I was pretty nervous. I thought we would see more downward price action. So I didn't go into the Monday heavy from Friday. I didn't really set up a lot of positions for Wednesday either, basically being pretty conservative here on CPI week. And then once we get CPI and we see what the market does, then I'll be a little bit more aggressive going into Friday and then Monday of next week. But otherwise, in terms of positions, I have two 178 puts here on IWM in both my IRA and taxable accounts. And then in my taxable account, I have a 162 put here on the NASDAQ for $1.01, which is in a small profit right now. Didn't get assigned on anything today because we had a nice little up day in the markets, but I'm still being pretty cautious going into Tuesday and Wednesday, and then CPI on Thursday. Let me know down in the comments section what you think of the markets and what you think the CPI report is going to be. And is Apple going to be okay if they don't sell as many iPhones? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.